Bitcoin is a digital currency that was created in 2009 by an unknown individual or group of individuals using the pseudonym Satoshi Nakamoto. Bitcoin has no central bank or government backing it and instead relies on a peer-to-peer network to process transactions. Bitcoin is open source and can be used for many purposes such as buying and selling goods, transferring funds, and even investing. The potential of Bitcoin is still being explored. However, its decentralized nature and low fees make it an attractive option for many people. There are only 21 million Bitcoins and this number cannot be increased. The foundation of Bitcoin is the blockchain, a public ledger that records all Bitcoin transactions. Every transaction is permanently recorded and stored on the blockchain, and all users have access to view the blockchain. Bitcoin transactions are verified by a process called mining, which involves solving complex mathematical problems. Once transactions are verified, they are added to the blockchain and the miners are rewarded with Bitcoin. Bitcoin has many advantages, such as low transaction fees, fast transactions, and its decentralized nature. However, there are also some disadvantages, such as its lack of consumer protection and its high volatility. It is important to understand both the pros and cons of using Bitcoin before making any decisions. Many countries have begun to regulate Bitcoin, and each country has different rules and regulations. Governments have imposed regulations in an effort to protect consumers, prevent money laundering and terrorist financing, and to tax Bitcoin transactions. It is important to understand the regulations in your country before using Bitcoin. A Bitcoin wallet is a software program that stores Bitcoin and allows users to send and receive it. There are several types of wallets, each with its own set of features. Some wallets are software-based and others are hardware-based. It is important to understand the features of each type of wallet before choosing one. Bitcoin exchanges are websites where users can buy and sell Bitcoin. Each exchange has its own set of rules and fees, so it is important to do your research before using a particular exchange. When buying or selling Bitcoin, it is important to understand the risks and make sure you have a secure wallet to store your Bitcoin. You can buy Bitcoin on exchanges such as Binance, Coinbase, Kraken and many more. Bitcoin security is of the utmost importance. It is important to create strong passwords and use two-factor authentication whenever possible. It is also important to store your Bitcoin in a secure wallet, such as a hardware wallet, and to never share your private keys with anyone. Trading Bitcoin can be risky, but also rewarding. It is important to understand the risks involved and to develop a trading strategy. Some strategies include day trading, swing trading, and long-term investing. It is important to research each strategy and understand the risks before trading. Bitcoin mining is the process of verifying and adding transactions to the blockchain. Miners use special hardware and software to solve complex mathematical problems and are rewarded with Bitcoin for their work. Mining can be done with a computer or specialized hardware, and it is important to understand the process before attempting to mine. Mining Bitcoin requires specialized hardware and software. The most popular hardware is the ASIC miner, which is a specialized computer designed specifically for mining. Software such as the Bitcoin Core wallet is also required. It is important to understand the hardware and software requirements before attempting to mine. It is important to understand the tax implications of using Bitcoin. In most countries, Bitcoin is treated as a form of property, and any profits or losses must be reported to the tax authority. It is important to keep accurate records of all Bitcoin transactions and to report them on your taxes. Investing in Bitcoin can be a risky but potentially rewarding endeavor. It is important to understand the risks and to develop a strategy before investing. It is also important to diversify your investments and to keep an eye on the markets. Bitcoin can be used for many different purposes, such as buying and selling goods, sending money internationally, and investing. There are also many innovative projects that are using Bitcoin's technology to create new products and services. It is important to understand the potential of Bitcoin before investing. The future of Bitcoin is uncertain, but many experts believe it has the potential to revolutionize the financial system. It is important to understand the potential of Bitcoin and to keep an eye on the markets. Bitcoin is a digital currency that has the potential to revolutionize the financial system. It is important to understand the pros and cons of using Bitcoin, the regulations in your country, the different types of wallets, the process of buying and selling, and the strategies for trading and investing. It is also important to keep your Bitcoin secure and to understand the tax implications. With its potential for growth, Bitcoin is an exciting technology to explore.